Over the course of the last few days, or maybe the last week, because I'm never sure when these videos are going to come out exactly, I've been giving you a bunch of catalysts, market movers, things that are going to cause Tesla stock to go towards 300 by the end of the third quarter, and then be heading off to 400 by the end of the year. Might take into 2024 to get to 400, but it's going to take a lot of stuff, a lot of execution, a lot of announcements, a lot of reveals, and the stock market's going to need to move too. Number one, by far, of everything on my list, and there's been 23, 25 items so far on the list that I've given you up to now. In addition to those some of those needing to pop and to hit, you also need the stock market to be starting off again on a bull, in the direction of being a bull, where people are acknowledging that we're back in a bull, where we're acknowledging that the economy is going to bounce back in 2024 if it hasn't already bounced back in the fourth quarter of 2023. So we need the macro, and this is what that's what I'm going to be talking about today, is what things do I think is going to happen within the next 9 to 12 months in the macro that is going to make Tesla stock go to those numbers I'm talking about. This is Randy Kirk. If this is content that you like, please hit like. Subscribe, hit notify. Lots of great new programs coming up. Look in the information below to see what's coming up. And that's why you'd want to hit notify. And then Patreon would be lovely. If you want to join Patreon, I would appreciate it. Okay, let's jump into it. Number one, the Fed drops interest rates in October of 23. I know. They just said last week, no, we're not going to drop interest rates this year. That's what they just said. The stock market dropped 500 points, or I think it was 500 points on Wednesday in the aftermarket. And then I guess on Thursday, it continued and dropped that 500 or so points. Because why did they drop all that much? It was because everybody was expecting that the Fed would drop the interest rates by the end of the year. Well, I'm saying that they are going to drop the interest rates by the end of the year. And when it happens, it is going to stimulate the market by that 500 or maybe 1,000 points in one day. Unless it's already baked in, of course, and there's always signals and ways that people are anticipating. So one way or the other, it's going to move the market higher. And as the market moves higher, so will Tesla. Remember, part of my theory on Tesla is that it is down because it is seen as a risky growth stock, and all the risky growth stocks are down 60, 70, 80% from their highs. It is in the same category as far as Wall Street's concerned. You may not think it should be categorized that way, but that's how Wall Street's looking at it. And until they see it as the blue chip that it really is, they're going to continue to value it that way. And that's bad on the downside, but it's great on the upside because it means that there will be a delta, maybe 2 to 3 times. Whatever the market's moving, Tesla will be moving 2 to 3 times up as they have moved 2 to 3 times down. All right, so the number one thing is the Feds will drop interest rates. Why? They will drop interest rates because there will be the money, M2 will be so flat to down that they will be getting nervous they're going to break something. You can't break that part of the economy. You can break a couple of banks and you can end up doing what they did, getting some mergers and stuff to take care of that. You can break housing. And, people's values in their homes have gone down by 50% before. I've gone through it many, many times in my life where your house one day is worth $1 million and the next day it's worth 500,000. I've been there. So, you can break those parts of the market. The part that you can't break is the money flow. It is disastrous. I've written about recessions. I've written a book on recessions. I've been through 9 major and minor recessions. And I can tell you, as bad as 2008 was, I just would never want to relive I forget which year it was, but where the money supply just completely dried up. Nobody had any money. It was horrendous as a business person, but it obviously also affected dramatically the average person, the average consumer. All right, so they will drop the interest rates because they'll be afraid that the money supply is drying up. So that'll be October 23. Hey, it might be November, it might be December. Hey, it might even not happen until January, but whenever it happens, that will be a huge thing. The CPI report will hit 3%. I'm saying quarter 3. That could happen sooner. It's already headed that way. I use Truflation, truflation.com as kind of my backup source for the CPI. It'll be interesting to see. Well, by the time you're seeing this, we already know what the CPI numbers were on Tuesday. But unfortunately, this is being shot before that. Anyway, but I think the CPI will not be showing 3% yet, but I think the CPI will finally be getting down around 3% in October. I think when that CPI comes out at 3% or less, even if it's 3.1 or 3.2, that will be a major market stimulus that will help the Fed to be able to lower interest rates possibly as early as October. And that will stimulate the entire economy as well as the stock market. And if the stock market goes up, Tesla goes up. All right. The next one is that when there's evidence, when people are starting to say that there's clearly a new bull underway. So, sometimes there's these false bulls and there's a beginning to a bull and then there's a big sell-off. Anyway, there's all kinds of things that happen in a market, but usually there's a point at which everybody kind of agrees the new bull is on the way. And that's when some of the risk money comes back onto the market. Between now and then, you'll see some people that have what I call itchy fingers that are starting to dabble in. But there's massive amounts of money, massive amounts of cash on the sidelines. That money is in money markets. That money is in treasuries. That money is everywhere but in equities. So once the risk off attitude changes and goes to risk on, a lot of that money will start flowing back on. And that's going to happen when there's some evidence that the economy is going to pop and that the market has begun a new bull, because there's FOMO. Nobody wants to get left out. Fear of missing out. Nobody wants to get left out. These guys a lot of the big money managers are competing with one another to get the best return for the folks whose money they manage. So they're not going to want to miss the next bull. They're not going to want to miss the next opportunity like an Amazon or an Apple. So you'll see this money starting to come back on. Okay, the next one is China's economy improves. So their numbers came out the other day and they had a 6% increase in their economy. I forget whether that was month over month. It's probably year over year. I'm almost sure it was year over year. But at 6%, that was pretty strong. Not for China, maybe, who's used to like 10s and 15s and 18s. But their economy was up 6%. You can't always 100% believe what you're hearing from China. And I know there's a lot of reporting that China is still pretty stagnant over there. I'm not getting much reporting from my associates that do business in China or who are in China. So I'm not really clear from to be able to report independently. But I think that the Chinese economy will recover as Europe and the United States begin their recovery. Obviously, when it's still true that when the US coughs, the rest of the world gets pneumonia. And when the U.S. gets over their cold, everybody else gets well. So I would expect China's economy to start showing evidence of significant improvement by Q3, and that will definitely impact the market. That'll just be one more reason, one more catalyst for the market to go into a full-on bull. The next one is that employment numbers, this could count as three, but I'm going to put it all in one. Employment numbers, earnings, and guidance will remain strong even as inflation drops. Okay, so this is the Cinderella, this is the perfect opposite of a perfect storm. This is the perfect environment. So the employment numbers and earnings were just strong, and even a lot of the guidance was strong in this reporting the last 3 weeks. I think this will continue, maybe not at the end of the second quarter reporting. May start again at the end of the third quarter. So we might see one kind of hiccup quarter and then go back to having good, strong guidance. Maybe we'll have a little bit of an employment slowdown in the second quarter. I'm not sure. But overall, I think we'll begin to see all three of those, employment, earnings, and guidance, looking strong by Q3. And if that happens, that's one more thing, one more market mover, one more way, just like we had on Friday, where we'll start to see the market responding. And that will also be good for the Fed. If the Fed sees all three of those happening, even as inflation drops, that'll give them all the more reason why they can drop the interest rates. Then here's my number. Here's my last one. If you waited around for this one, then I hope you enjoy it. I think that both Biden and Trump will disqualify themselves by quarter 1, 2024. And that will be a huge stimulus. Now, it may be 2 different days. I don't think it's going to happen on the same day. They're not going to get on TV and both of them are going to shake hands and go, well, neither one of us are going. I think that probably it'll start with Biden because of his health, because of his mental health, because of the poll numbers, et cetera. Slowly but surely, the Democratic Party will force him to drop his bid. I don't think it's going to be Kennedy. So that leaves a big question as to who in the world it'll be, because it sure can't be his vice president. I can't even say her name out loud. So as a potential presidential candidate. So I don't know what the backup plan is for the Democrats. Then Trump will disqualify himself. And again, it might turn out he's made some really stupid comments. And I'm a Trump fan, by the way. He's made some really stupid comments that I was even like shaking my head at. So I don't know whether that's him being off his game. I don't know whether, because these are, yes, he always has said some things that cause you to scratch your head. These have been even bigger head scratchers. So there's a lot of stuff going on with Trump over the next 3 months, 6 months, 8 months. I think by quarter 1, the handwriting will be on the wall and he will drop out and he'll use age or health or something as an excuse. But that'll allow an opportunity for DeSantis to come in, and he's pretty much got a shoe in, I think, if Trump bows out. So that'll also be good news for the stock market, because I don't think the stock market is excited about either Trump or Biden as the next president. I think they would like to see some younger blood. So anyway, I thought I'd throw that one in for a fun last one on this entire series. 4 of these. If you want to go back and look at the other 3, I think you'll be entertained by them. Maybe they'll help you with some of your decision making. I am not an investment advisor. I guess I'm kind of a pundit. I'm just looking at stuff based on my education, my experience, my long life, and my involvement in watching financial markets and running businesses my entire life. I come up with some conclusions about what's going to happen with the financial markets as well as Tesla, and I pass them along to you. Maybe they're helpful, maybe they're not. But if they are if they're really helpful, join my Patreon. It's only $5 a month. And then, of course, hitting notify and subscribe is always a good idea too, if you'd like to see more content like this in the future. So that's the end of the series. It's been great talking to you.
Click the link below to get your paperback, Kindle, or audiobook now.